I'm Anthony Chapman, your host for today's event, and I couldn't be more excited to guide you through what promises to be an incredible day packed with insights, strategies, and real world trading wisdom. Markets are moving, volatility is high, and opportunity is around us if you look hard enough and are disciplined to make the right trades. That's why we've assembled an all star lineup of elite trading minds, seven experts who are ready to share their most powerful strategies for profiting in today's market environment. Whether you're a seasoned trader or just starting out, today is about equipping you with tools and ideas you can act on immediately. So let's dive in. Up first, we're joined by the dynamic Melissa Armo of the Stock Swoosh TV. She's an analyst and educator and the force behind Make a Million with Melissa. Her presentation is titled Trade on the Side of Institutional Money and Gaps. Melissa's Golden Gap strategy is built on tracking big money. And today she's going to show you how to align your trades with institutional flows to maximize profit potential. Let's give a warm welcome to Melissa Armo.
Good morning. Can you hear me?
Yes, I can. Thank you, Melissa.
Wonderful. Let me know if you can see the screen too.
I can. Can the audience as well?
Perfect. Thanks for having me. I think I have till about 12 o'clock. Is that correct, Anthony?
Yes, that's correct. Thank you.
Perfect. I will watch the clock. Welcome, everyone. Thanks for being here with me on a Saturday morning. It's actually sunny here in New York City, which I'm thrilled because we've had nonstop rain and probably the coldest May. And today is the last day of May, so I hope June is actually going to be beautiful and sunny and start to feel like summer here in New York City. So today I'm going to talk to you a little bit about what I do, and if you have questions, you can plop it in the room, and I will answer the questions as we go along this morning. So I'm going to talk to you today about trading on the side of institutional money and gaps. And when I started trading, which seems like a long time ago, 17 years ago, I had no idea what I wanted to do except for the fact that I wanted to make money. When I started out, I was doing mortgages, and that was 2008. And the mortgage industry was totally collapsing, 2007, 2008. And I said, you know what, I want to do something different with my life. But at that time, actually, this was before work at home or work from home was popular, when now everyone's doing it. I was working from home. So the idea of finding another career to substitute my mortgage job that I could work from home was something that I really liked. And I said, you know what, I think I can do this. But when I started trading, I didn't know what to do. And it was more challenging than I thought. But I very quickly realized, I was smart enough to realize that you only needed to do one thing in order to make money. I only needed one strategy, and many days only one trade. So that was something that I learned, right out of the gate. I didn't know what I was doing. Like I said, it took me about 3 years to totally get to the point where I knew what I was doing and creating the system that I've been doing now for the last 14 years. But I knew that I really only needed one thing. And I think one of the critical mistakes that a lot of traders make is they try to learn too many things. The idea of becoming a jack of all trades and a master of none doesn't work for the market, particularly in times when the market is tough. And I think at the beginning of the year or towards the early start of the year, I think people thought the year was going to be something that it turned out not to be. And then it got choppy for people, and now everybody thinks it's easy again. But trust me when I say June is probably going to be one of the most volatile months of Junes that we've ever seen in the market. Typically, people think, well, summer is not a busy time to trade. That's just not true. Earnings season starts in July. So July and August are earnings, where stocks report earnings, and they typically gap, which we're going to talk about in a minute. But I think June is going to be crazy volatility because we're going to be starting to talk more and more about tariffs because the tariff pause, remember, that the current administration put on ends at the beginning of July. So that's going to be on tap, and already you've seen some volatility even in the last 2 days where people are really talking about tariffs again. I also appear on TV, I talk about the stock market, I talk about the economy. They're not necessarily related. You may have a fabulous, fabulous, fabulous economy and a market selling off. You could have a bad economy, or you could have, we could be in a recession. You could have the market at new highs. So they don't always go hand in hand. Again, we had a number on Friday, an inflation number, and the market actually had a sell-off Friday. So again, and that inflation came in lower than expected. So they don't always go hand in hand. it's something that we can talk about more at another time. But if you'd like more information, you can always call me at 929-3200-GAP. You can email me at melissa@thestockswoosh.com and follow me on any social media sites as well. So like I said, it's summer. It's a great time to trade because what I do is look at fast trades in the morning. I do not want to sit at a computer all day for 6.5 hours. Now, I do options, which we will talk about. I don't babysit my options where I'm staring at a screen. I may be in an option later into the day, but I'll check it like at lunch or I'll check it before 4 o'clock. I'm not sitting and staring at my options trades. I'm doing the weekly options that expire in the Fridays. But my day trades, I'm in and out quick in the morning, the first half an hour, hour of the day. And again, nice to do that in the summer. Why? Because you have the rest of the day to yourself. And like I said, I'm really looking forward to having some downtime, in the summer. It's been a busy start, really busy start to 2025 as far as trading goes. And like I said, when I started trading, I wanted to do a different career. Nowadays, I think people don't necessarily want to get involved with trading because they want to switch jobs. They just want to make extra money. Despite the number that we got Friday, I still think, this is me personally, and again, I live in Manhattan, I think prices are still high. You could say, well, they went down. Yeah, but rewind 5 years ago, or 6 years ago, or 4 years ago even. I still think we're in a high inflationary environment compared to where we were 5 years ago. I remember the prices of things. So lots of times now people are coming to me, they want to trade, they like their job, they like their career. They're not interested in doing this for the reasons that I was 17 years ago necessarily, but they just want something that they can do on the side that's part-time hours where they can make extra money. And that's fine. Whatever the reason is for you wanting to do it, I think you should know why you want to trade. But a lot of people want to do this. They want to make money, but a lot of times people don't know how to make it happen. So whether you want to do this full-time or part-time, like I said, for me, it's a part-time hour situation. And like I said, when I was doing mortgages, it was 7 days a week. So even if I sat at the screen all day, which I don't, but even if I did from 9:30 to 4, that's 6.5 hours, So again, I'm trading during the live market hours between 9:30 and 4, so it's not even 40 hours a week, to be honest with you. But you need the right tools to be successful, number one, and a lot of people don't have that. And what do I mean by the right tools? You need a strategy and a system. You've got to have the right system in order to get good results. You're not going to get good results if you're all over the place. It's just not going to happen. It's going to be the luck of the draw or a 50-50 crapshoot. And eventually it takes a toll on you. What I found, again, just as my personal experience when I started out trading, and then again teaching people for 14 years, is a lot of times when people get into a losing streak where they're trading and taking losing, yes, it takes a hit to your trading account, but to be honest with you, it takes more of a toll on you emotionally. Because then what happens is you start to go into that negative Nelly kind of behavior, and then you stop believing that you can do it at all. And that's the worst thing to do. You can always make money in the market if you learn a system that works. You can always make money, even if you're in the hole, you can always come back. Always, 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 always. If you have a bad day or a bad week or a bad month or even a bad year. Like if you're having a bad start to 2025, it's, you've 5 months into the year. You got plenty of time to pull your year around. But not if you're not using a system that works. You'll dig yourself a deeper hole. If you keep doing what doesn't work, you're going to dig yourself a deeper hole. But for many people, what I find is that the emotional toll of going into the losing mentality takes a toll on them even more than the financial aspect of it is. And again, nobody wants to lose money, so you have to be very thoughtful about the trades that you take. So when I decided to do this, like I said, I realized one thing was all that I needed. So I was trying to hone it down. I was looking for high odds trades. And it wasn't like I started out and I woke up one morning and I figured everything out. No, like I said, it took me 3 years. So I developed a system, which is a rating system. It's a checklist. And this is what I do every day. Even after all these years, I do it. I don't scrunch it or skip it or trade on the fly. I go through the process of rating the gap every single day. So I developed a system that would give me high odds. I said, well, if I take this trade, it's high odds of working. And that's what I want. So I look at 26 points. I don't have to get a perfect score. I'm trying to get 20 or more. If I get 20 points, I feel like the trade is going to go in my direction. Again, whether I go long or short, but we're going to talk today. I prefer to short. And there's reasons for that as well. So one of the biggest shorts we've had in the last week or even the last month was UNH. And I don't know if you've been following this. Again, if you love fundamentals, if you love it, love it, love it, there's been tons of things that have been going on with this UNH news-wise. But we did some beautiful day trades and some beautiful puts in this when we were short it. And again, it's a lovely chart. But let's talk about what is a gap. So this is a daily. Okay, it's a daily chart of UNH. So a gap is the difference between the close and the open. So every day, the stock market, the U.S. stock market closes at 4 o'clock and opens the next day at 9:30. Now, does every stock gap every day? Yeah, usually everything gaps, including the market. But it doesn't necessarily mean it's playable or predictable. Yeah, that's where I coined the term the golden gap, because it's like finding gold if you find something that rates good. So again, well, actually this was Mother's Day weekend. I can't believe that was so far away now. This was 2 weeks away. 2 weeks ago this was. We did this here. Closed here, gap down, open, dropped. So this was a short. Okay, so we shorted this. And again, I looked at this before the open. So I'm not trading before the open, but I'm preparing. I'm getting ready. And I'm trying to figure out what to do. So if I don't like anything by 9:30 when the market opens, I'm not doing anything that day. And if I do, then I know what I'm going to do. And then I still don't do it until after the open. Okay. So this was one that we did. I sent the trade out for the options newsletter before the open, but you can't do the trade till into the open. So again, I'm prepping in the morning. So I called the 340 UNH puts that expired on 5/16. This was an options trade. So I bought the put and I sold it to exit it. Let's go back here, look at the 13th. So again, I did the 340s. You could have done a lower strike if you wanted to, actually. But I did it. It fell, boom, boom. So again, this was a 16th date expiration that I called on the 13th. So again, even my options trades, I'm doing what I consider short term. Okay, short term. So here was the trade. Again, this was not crazy expensive, but again, it's a $300-some price point stock. Cost $14 for one contract on average. I did 7. It was a great trade. Got it in on the 13th, exited in the 15th, and again, made 471%. Now, is every trade that I take, do I make almost 500%? No, but some of them I do. Some of them I do. This was a great trade. So I made $46,200 on this trade. So go back, here's the chart. I didn't, got the drop. Boom, boom. And again, if you did a smaller size, which you absolutely could have done. Oh, I don't have the beginner in here. I'm sorry. If you did a smaller size, you could have risked one contract, risked $1,400, just so you know, sold it at 80, and you could have made $6,600 or $6,600. So that's still a nice trade. So again, to be able to risk $1,400, what would you need? What size of account would you have needed? Probably like at least 10 grand. I'd say have 10 grand. 10 grand is good. I wouldn't risk $1,400 if you have 2,000 in an options account. I think that's too much. That's more than half your account of risk. But again, if you risked, $1,400 on this trade and you had 10 grand in your account, you would have made over $6,000 in this trade. And your account would have grown by over 30%, actually almost 50% in one trade. Let's go back. Actually, more than 50%. So we played the gap. Boom, boom. Now, what you could have done, and I don't do this here, you could have done, say you wanted to do 2, and you risked over 3,000. You could have got out of 1 here. Basically, say it wouldn't have continued. You wouldn't have lost in it. Booked 1 contract and held the other one down. You could have done that too. Now, I don't usually split my trades like that, but there's another idea for you to do it. But again, this was a short. This was a short. So what happened here, institutional money dumped it. They sold it. They sold the stock. They dumped it. Boom. It got dumped. So again, what am I looking for? I'm looking for whether or not I want to go long this, or whether or not I want to short this, or whether or not I don't want to do anything with this, okay, which I obviously decided to do something with it, and it was a good trade. So getting into shorting and why I like to short and why I prefer to short, when I started trading, within the first couple of months of me trading on my own, I did a trade. I'll never forget. It was a trade in Netflix. I didn't have big size. I was shorting on margin. It wasn't an options trade. I had a couple hundred shares and I made over $1,000 in the trade like in less than 5 minutes. I said, oh my God, I want to do this. I'm going to do this. Stocks sell off much, much faster than they ever rally. It's just what it is. There's no panic involved with buying. It's very rare that you see panic buying in anything. Stocks are the overall market. But stocks move faster to the downside. So I like that part of it. And also you get big moves to the downside because panic comes in. And again, I was talking earlier, I started talking about the month of June. Again, people are going to be uneasy about what's going to happen, getting closer and closer and closer to the date of the tariff pause, not knowing if it's going to, be revised or if it's going to be kept. And so you could see some selling in stocks or the overall market. Again, panic is the key to shorting, to making money shorting. But getting back to what I was saying, following the smart money really is the intelligent choice. And in fact, it's the only path that will lead you to success. I find that a lot of people, want to, buy the dip and trade gaps for gap fills. That does not consistently work. Sometimes it works, but it doesn't consistently work. So the key to making money for longevity, if you really want to do this, whether it's part-time or full-time, is to having something that consistently has more winners than losers. I have trades that lose. There are trades that I take that loses. In fact, the loser from last week, you can look it up. I had bought a put 2 weeks ago, actually, in Target. I did a video of it. It's on my YouTube. Target didn't work right. Target had earnings, and I bought a put, and it lost. It just never went right. It kind of, the first day I did it, I sort of had a bad feeling about it, but I gave it a shot, and then it just never went right. So it's not that every trade that I take wins, but I have more winners than losers. And then I have some winners that are very big winners. And actually UNH is a good example of that, but we did a couple of trades in that. But getting back to what I was saying, how do you determine what the smart money, the institutional money, the big money in the market is doing? I use my rating system. And it's based on technical analysis and the gaps. Everyone says, well, do I have to buy software? Do I have to? No. You just have a trading account. Whatever broker you have to have live data. Okay, you have to have a live data feed, you have to have charts, and you have to have a daily chart. And that's it. And you should get that, with your broker. So then you can figure it all out. It's just based on technical analysis. What is technical analysis? Technical analysis is predicting future price movements by looking at past price movements. And that's how I do it. Excuse me. And any questions here? I'm going to take a sip of coffee. Have my caffeine for the morning. So again, part of the magic of trading is not predicting what's going to gap. Like I'm not a psychic, Somebody says, well, why aren't you doing leaps if you, think the market could sell off? Why don't you buy leaps in the SPY for January 2026? Because again, I'm not a psychic. I'm doing short-term moves, which is actually something that you can wrap your head around predicting pretty close to the button, pretty close to the nose. It's like if I said to you, what are you going to have for dinner tonight? You'd be like, oh, I'm defrosting chicken. I'm going to make chicken parmesan or something, Saturday night dinner. But if I said, what are you going to have for dinner next Saturday night? You'd be like, oh my God, next Saturday? I have no idea. I didn't even go grocery shopping yet. So again, that's just a span of a week. So like to predict where the market or the SPY will be by January 2026, 8 months from now, no one knows. Because I don't think anyone could have predicted the movements the market had in the sell-off that we had late March, early April. And again, I'm not predicting where the market's going to be by July 4th. But I am trading this coming week. And I'm going to trade the next week and the next week and the next week. And as I see the moves in the gaps, then I will be able to make my choices to take my trades, to take the trade, get the move, take it, book it, get out. Take it, book it, get out. Again, that's the whole way you chunk it out and you can make money, again, whether you're doing this part-time or long time. Somebody's asking a question. How to check the 26 points for a stock? I don't like to rush it. I open the room every day at 9 a.m. Not cutoff time to enter is 9:20. If you're a room member and you want to log in at 9 a.m., then you've got 30 minutes to go through your points. I think you should give yourself an hour. So you should probably start about 8:30. Now, for me personally, I don't like rush, okay? I get up early, look at the market before I even exercise in the morning, go walk in the park if it's not raining, come back, have breakfast, look at everything around 7 a.m., 7:30. So I give myself probably an hour and a half because I don't like to rush. So again, that's just me. I would give yourself an hour. I think an hour is plenty of time. I think 30 minutes, you could rate stuff in 30 minutes and you could scan in 30 minutes, but you're going to be rushing it. And I just like to be kind of ready to go by like 9. You know, not that I'm not still looking at stuff after 9, but like by 9 o'clock, I kind of, like most data is out. Data points are out by 8:15, 8:30. The market sometimes moves on econ that we have out. By 9 o'clock, things are pretty much situated that I know what I want to do. So it doesn't take hours and hours and hours if that's what you're asking me. Why? Because I scan very quickly in the morning. I can scan very quickly, just eyeball things and say, no. So most things I'm not even rating. So even though there's thousands and thousands and thousands of things every day that gap, once you learn the system, you're not going to rate everything. You'll make a small watch list of 5, 10, 15, 20 things if it's a busy earnings season. But you're not going to rate hundreds or thousands of things. Even in a busy morning, I might rate 20 things, and that's a lot. But you could do that in an hour. So again, I don't rush it, but you're not rating thousands of stocks, because once you learn the system, you're manually just eyeballing and saying, no, you can see right away, this isn't even going to cut the honey mustard. And it's like a nothing burger, you know, which actually, to be honest with you, most gaps are. You know, on most any day of the market, most stocks go with the overall market direction. So then you're like, okay, well, how do I play it? Well, then you got to get the market direction right. How are you going to do that? Look at the market from Friday. Again, I don't have a Friday chart in here. But we gapped down Friday, sold off really hard, and then late into the close bounced. Like, again, unless you're perfect at reading the market every second or every minute of the day, if you don't do something that's on its own that doesn't need the market, you're going to have a hard time making money. And you can't even do a stock in the right direction of the trend even all the time, because that's not going to work either. And then, are you even reading the trend right? A lot of people don't read trends right, actually, which is another topic for another lecture at another time. Anyways, I just want to go back here to this point in time, which we're going to come up against. We're going to come up against here. I said it all the whole time after this bar of the day that Trump paused the tariffs, which was the night. I said, this isn't over. This isn't over. Are you kidding me? This is not even over at a long shot. And everyone was convinced it was, and this was the low for the year. I don't know if it's the low for the year, but I got to be honest with you. I'm probably 1 in a million people that think it may not be. Most people think this is. I'm like, it's 50-50. Because I wouldn't be surprised at all if it's not. And some people are betting the farm and risking the farm that in fact it is, because people are long. So let's go back here. Stock close here, gap down. Again, this is a chart of the SPY. This is a gap. So again, this was back beginning of April. Market closed up here, snug as a bug, around 565 and change, gap down, open, rallied, drop. So you could have shorted this on margin. Again, this is the SPY. It's kind of pricey, or you could have bought a put. So the puts are cheaper to do. People are even doing daily puts now. Now, I don't do the daily puts, but they're way cheaper than the weeklies. Then we had another gap. Close here, gap down. Boom. Beautiful sell-off here. Again, this was a fatter day than the first day. And again, this was a short. This was a short. Here's another chart that I've been loving. We've been doing Apple, and it's been working. We did a short in this here. Did a put. Got the drop. Boom. Again, there's been news out on this. This has been something that's been really on tap with the tariff issues. So there's been a lot of gaps in Apple. So again, I find gaps and I rate them using a checklist. Gaps have to be qualified. The checklist tells you what to look for in the price of the stock. And again, it's based on the chart, which is something anybody can get anywhere in the world at any broker. You got to have live data, though. You got to make sure you have live data feed. And again, if you want to be somebody that's, into the fundamentals, fine. But you should make decisions based on that for short-term trades. You want to invest in a stock long-term. You're like, I want to buy this here and I want to hold it for the rest of, 25 years or something because the fundamentals are good. That's not what I'm doing, okay? I'm doing short-term trades where we're taking trades, getting the momentum, getting in and getting out. So the big money comes in and does what? It either buys a stock or the market, or it shorts it, or it sells it. So again, I trade on the side of institutional money for the big momentum moves. Big momentum can equal big money. Again, this is just such a great chart. Now, I know that there's people out there that are talking about buying this. Again, because somebody asked me about buying this, I said, oh my God, what are you doing? So on certain chat rooms, Reddit chat rooms, whatever, people are buying this they think it's extended, they think it's sold off hard, they think they're buying the dip in this, they're buying this for a gap fill. My take on this, to be honest with you, is that this is lower. I mean, I don't have the last 2 weeks in here, but you can pull the chart up for yourself and look at it. But again, just a beautiful, beautiful, beautiful example of a very strong downtrend, okay, in this particular chart. So this was one of the days that we shorted this. This was a day trade. Again, this is a day trade where you have to have a margin account. Shorted it at 275.10, boom, got out at 270.20, beautiful trade. You could have held it even more. Again, I like to do my day trades in and out quick. So the entry was here, got out, got the drop, but I want to show you here, this came all the way down to 250. I could have held this. So I don't always get the best exits on all my trades, options or day trades, because again, I'm trying to get out of trades and make money, momentum, and this was a good move. Like this is $5, boom, good, done. Morning, finished. But I just want to show you that this continued. So one of the reasons I like to do puts is because I think it's easier to hold a put. I think it's easier to hold an option because I have a week. Or if I do something on a Wednesday for the following Friday, I've got a week and a half or whatever. Like, I have to get out of my day trades like this before 4. And I don't carry them overnight and hold them, just so you know. But you have to have a margin account to be able to do that. So anyways, getting back to the rating system, it's a very useful tool. I use this tool each morning to determine what stock to trade and when. It's a very useful tool in the market, but particularly in this type of market where you're back and forth trying to really trade the news. That's what people are trying to do right now, trade the news. Or trying to guess what Trump's going to say, what Scott Bessent is going to say. They're trying to guess all kinds of things, Look at the price, okay? Are institutions selling it? Are they shorting a stock? Are they buying the market or not? Or are they doing nothing? You could have a neutral trend too where it's back and forth really basing out, not going anywhere. The system also can help you decide if you should exit along. Again, I'm talking about shorting here. So like if you rate something and if you're in something long and a gap's done against you and you're long the stock and maybe you're long if your retirement account and it rates good as a short where we might short it or do a short-term put in it, maybe you want to take profits at it. So that would help you to take profits in longs, but it just takes the guesswork out of your trading if you're looking at something and trying to figure out what to do, because you can really get in your head about it. Everyone's trying to figure out what's going on with the Fed. Are they going to lower rates? What's going to happen? Again, I said this all last year in 2024, that I didn't think the Fed was going to lower rates 5 times. They didn't, okay? And they ended up not even lowering rates, even though all year they talked about it nonstop until the fall of last year. And now here we are, to be honest with you, only in 30 days, we're 6 months into 2025. And they're still talking now about lowering rates this year, 3 times, 2 times. People are still, I wouldn't be surprised if they end up raising rates. I don't know if it could happen this year, could happen next year. I wouldn't even be surprised. So again, you can't predict what Powell's going to do. It's, you're just going to spin your wheels. Look at the price, see what's happening, make a decision, and do it. Again, here was another gap. Here's an example of a gap. Stock closed here, gap down. This was AMAT. Dropped, fell, boom. Again, this was a short. Again, I'm looking at the daily chart. Someone's asking a question. Does your system depend on predicting a gap? No. I see the gap. I'm not predicting the gap's going to happen. In other words, go back to this here. Did I know AMAT on the earnings was going to gap down? No. Was I in the trade before this? No. No. Do you wait until the gap occurs? Yes. Do I use a market order or a limit order? For my day trades, I'm using hotkeys, and I have them set up as limit orders. And again, if you never used hotkeys, you can practice that or play around with that yourself. I think mouses are slower to enter trades if you're using a mouse. But there are times that I will, let me go back to the UNH, be in a trade already that I get a bigger move, which is what happened with this, that I didn't predict the gap. You could say, well, did you predict this gap? No, but I was already in it here. So I got paid more. Now, I could have got out of it here. I could have. I was up. I could have, but I didn't think there was any chance in hell it would go up over 340 where it closed. So I opted to hold it. And then the second day, it was beautiful too. So I decided to hold it, and then I got this. So did I predict this? No, but I was ready in the trade. So there's times where I will be in a trade. I will tell you, I'm in some things I did Friday. So I'm not going to go into details of what trades I'm in. I'm in some stuff Friday that I think gaps down on Monday. Some puts. So we'll see if I'm right. But like, I will take a trade and maybe not get out of it because I'm not up. Maybe I'm flat. Maybe I'm up a little, down a little, whatever. Or maybe I'm in it like this, and it's my choice to hold it. Now, you could have got out of it. You could have got out of it and retaken it. But I would have done a lower strike here. But anyways, this was so far in the money. I said there's no chance in hell this goes over 340 by the 16th. And I was right, it didn't. Or like I said, you could split it. You could split it. You could do one, you could do two, and get out of one and hold one. Anyways, in order to become successful in the market, you have to become an expert, a specialist. So I'm an expert in shorting. I'm also an expert in predicting directional bias, whether it's long or short, although I prefer to short. And again, I'm a specialist in one specific strategy, which is based on gaps. So I go on TV, I talk to a lot of people. A lot of people are managing money for people, and they don't know what a gap is. They don't understand gaps, or they know what a gap is. They don't know how to read them right. It's amazing how many people are managing money, wealth advisors, whatever you want to call them. They don't even know how to read a chart. It's something that was really eye-opening to me when I started television about 10 years ago. It was almost shocking, actually. So I choose a strategy that reads institutional money, or what I call power money in the market. This brings momentum and opportunity. So reading is a skill. It's reading charts is you're looking at something, you're trying to predict where it's going, and you learn it, okay? It's a skill. It's a lot of times people are trading, and like I said, if they get in their head about losing, it's okay to just say, I have no idea what I'm doing. I'm losing money. This isn't working. I've had it with this thing. It doesn't mean you can't make money in the market. It doesn't mean it's anything wrong with you. It doesn't mean you're dumb or you're stupid or anything else. And maybe you paid for classes in the past and you didn't learn anything, or maybe you took trades and you lost. You can always make money back. You can always make money back from the market. Really, literally, like once you get on a string of positive trades and learn a good system, it can all turn around for you, and it can turn around very quickly. Again, I can't predict the next 500% option I'm gonna get, but I know that if you're trading with me, if you're on the newsletter for a year, you're gonna get trades like that with me. Here was this UNH again. So here was another trade we did the 13th. This was the first day. Closed here, gap down, open, dropped. Again, if you're like, oh my God, this is so expensive, just do the put. Okay, but I shorted this on margin, 336.95, boom. Again, this is crazy. Almost $10, but this stock can rock and roll. So again, with only 800 shares, I made over $7,500. This is a nice move. Again, if you don't want to do this, you can buy the put and get out where I get out as a day trade. So where I got in the day trade, you could have bought the put, just bought whatever, 330s or something. And you could have wrote it down and you could have got out of it as an option, played it as a day trade and got out. So again, I did a margin trade here, but if you could do whatever works for you. If you don't have a margin account, then you can do that. Any other questions here so far? I might have to skip through some of this. I see I only have 12 more minutes. Any other questions? So anyways, you need a winning strategy. You got to learn it. I think it's important to have a mentor, someone like me that guides you in the room. And then I think you got to get good at one thing, because again, that's all you need to make money. And then you add the size to it and you implement a winning mindset. What helps you do that? Just getting good. Just getting good. I'm very confident what I do. And if I make a mistake and I lose, then I go back and I review, was there something I missed? I went back and looked at the target. I said, no, there's nothing that I missed. That market happened to rally those days and it screwed up my target trade. But I do think target actually is lower. I didn't reshort it. But, again, sometimes you go back and look at something if you lose in a trade and you say, well, did I miss something here? You say, no, it's just the luck of the draw. It just didn't work in my favor at that time. Anyways, let's talk here, review again. What is a gap? A stock gap from the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. And I'm looking to determine the control. Again, if buying comes in, you want to go long. If selling comes in, you want to short. Because if you get the direction right, you're going to win. If you get the direction wrong, you're going to lose. Period. End of story. And this has nothing to do with the trend. It's nothing to do with the trend at all. I'll short stocks in an uptrend all day long, all day long. So it has nothing to do with that. It's the overall control. Someone's asking a question. So you can buy puts at the money instead of shorting a margin. If you have an account set up to do options, you can do it. You would buy the put to enter it and try to just pick a strike as close as you can where the price is of whatever you can pull in the drop down. Again, I'm not doing the daily markets expirations, but if I short UNH, which is a Friday expiration, you would just pick the closest one at the price of the stock, wherever it's at, that you can pull. And then you would get out of it in 5 minutes, 10 minutes, 15 minutes. And there are people in the room that are doing that because they don't have a margin account, or they don't like having a margin account, or they have an IRA or whatever. They just like options. You know what I mean? Like, so that's fine. And they're cheaper. I will say that. Again, I like holding options a little bit more, but that's not anything to do with the system. That's just my personal preference. And I like day trades. I do like day trades. You know, I like the fast trades on margin, and that's how I started out trading, actually. Anyways, what is a golden gap? It's a gap that rates 20 points or more per the 26 rating system. This is what you come and learn in my class. It's the checklist. It's the meat and potatoes, what tells me how to make the picks. How did I know UNH would fall? Because I rated it, and it rated good. How did I know Apple would fall? Because I rated it, and it rated good. We've been doing a lot of trades in this, to be honest with you. Just, they're almost all working. There was only one that we did recently that didn't work. The 210 puts here, 523 expiration. This was cheap, to be honest with you. 280, sold at 6, made 114%. Again, we did this on the day of the 15th. I sent this out at 8:43 in the morning. Oh, here was the day. I already talked about it. Boom. So again, you would take it here, and you wait for the drop. And in that case, again, I was predicting the sell-off. So I don't know how it's going to sell off. Is it going to sell off on the day I do it? Is it going to sell off the next day? You take it, you wait and see. Again, if you did 1120 risk, you could have made 1280. That's a nice trade. That's a good, solid trade. But again, everything I'm doing is looking for the institutional money, trying to read what's it going to do. Are they buying Apple, or are they not? Are they dumping it? Are they dumping it? So again, that's what I'm trying to look for. And you gotta get up in the morning and see. If you learn how to read the footprints of big position players before the momentum occurs, you can take the position in the right direction, get out after the move happens for profit. But you have to understand how to trade with this side of power. It's going to help you win big. Like I said, also, I'm a mentor for people because I'm running the room, I'm calling the trades, I developed the system myself, and I think that really helps you. When you have questions, you can email me, call me. You can always reach out to me after the class. And the reason I got into gaps, like I said, is because you have big momentum. So I'm not looking to scalp something where I take 10 cents, 15 cents, 20 cents. I feel like I'm taking too much risk to just make 10, 20 cents of something. I'm trying to make $1 or more. I'm trying to make 100% in every trade that I take, whether it's an option or a day trade. Again, some end up being way more, but it's not like necessarily pre-planned. I might take the trade, and then it goes, and it's going, and then I'm like, okay, this is going to the next target, it's already hit target 3. Well, I'm going to ride it out. So sometimes I'll take it, and then again, it's going, and then it turns into a big trade. I don't always know necessarily, like before the open, if something's going to be a huge winner. I'm rating the gap and saying it's going to sell off, but I don't know if it's going to go 500% necessarily. But as I'm watching it, as I'm reading the price action, as I'm looking at the technicals, I'm seeing it. And again, what would you learn from me? You're going to learn how to rate the gaps, and you're going to learn how to enter the trades, and you're going to learn how to read who's in control. But for me, it's really just looking at who's doing what in the price of the stock. Again, I'm very good at chart reading. I know people say, well, what books can I read? There's really no books that you could read to prepare for my class. You're into candlesticks. You can read all kinds of books about charts and candlesticks, even though I don't call anything any fancy dancy names with candles. Someone's asking something. If your options trades is losing, can you cut your losses before expiration? I personally do not kill my trade in the middle of it. If that's what you're asking me, if it goes against me, I will write it down to the Friday expiration, and it'll usually expire with the full loss. If you want to change what I'm doing and, kill something at 50% or whatever, you can. Am I going to share my scoring system? No, the scoring system is what you would pay for when you sign up for the class. First of all, it's a 16-hour class, and I'm not giving this scoring system for free. People pay me for that information. The class is next weekend. I'll skip ahead to that in a minute. Any other questions? Again, we've been talking about institutional money. We've been talking about quality. And again, we've been talking about trading, where I run a live trading room every day that opens at 9, and we start to trade at 9:30, where I'm taking the trade, again, like the UNH trades, where I take the trade, get in, get out. If you go to my YouTube, you can see some of the trading room videos that I have on there. But I really have become an expert in shorting. I mean, over the years I've been doing this. We were in the market before that drop. I didn't know anything about the tariff stuff that was happening. We were in quite a few things. So it's going to, I don't know what I'm going to do this month. It's like, again, I'm playing it just out till next week so far. But I can tell you it's going to be a very, very, very volatile market. So it's about working smarter, not harder, if you want to learn how to trade. And you've got to get consistent with what you're doing. But like I said, I like to short because I like the panic aspect of the big, big sell-off. And you think about it intellectually, it makes sense. You can make money going institutional money, and you will lose if you're against it. So how will you learn the system? You will learn the 26 points in the class. You will learn where to enter them and when. And again, we're looking for early confirmation between 9:30 and 10, precise entries with follow-through and a good risk-reward potential. So I'm trying to get 1 R. But again, many trades are more than that. So if you've been someone that's been trading the market, like I said, and you're not having a good start to 2025, you still have plenty of time this year to turn it around. So if you're interested in learning my system and my method, you can learn it next weekend. Again, it's the 26 points, and it's all of my entries, and it's all of my exits that you'll learn in the class. So it's a complete system to use to trade. And again, the short class where I'm shorting is the class that I teach. We sometimes go long, but it's really rare that we go long. So the class is called the Golden Gap Course. It's a full course in how to strategically find, pick, and play stocks that are professional bearish gaps. Class is June 7th and 8th, 9 to 5. And again, the class tuition is $69.99. Class is online. You can be anywhere in the world and take it. And I'm doing a Hello Summer Special, which is if you sign up for the Golden Gap Course combo, which is Saturday, Sunday, which is the Golden Gap, and then the Trends, which is Tuesday, June 10th. The price of these 2 classes, which is 3 days of courses, is $79.99. I'm running a special through tomorrow where you get 3 subscriptions free for 1 year, which takes you into June of 2026, which is a long time, really. And you get the Wealth Manifestation course free. That's in July. So it just happens to be a special I was running all week. If you're here and you're interested, it ends tomorrow. Email me at melissathestockswoosh.com. If you want to sign up, Jerry, you can email me. If you didn't get any value out of this presentation, then you weren't paying attention, because I said a lot of valuable things for free. Any other questions here from anyone? If you're interested in shorting, if you're interested in learning how to short, if you're interested in learning how to trade gaps, and again, whether it's options or day trades, email me at melissa@thestockswoosh.com. Thanks so much for having me.